Hey guys, what's up? Shane here from Awake FX. I want to welcome you to this trading video. So thanks for clicking. In this video, I'm going to discuss the daily bias and is it important for your intraday trading. So we're going to discuss the daily bias. I'm going to also talk about a top-down analysis, the new week opening gap, and give you an idea of how I look at the higher time frames before I zoom down into them 1 minute and 5 minute charts, what I look for on the higher time frames. So sit back, enjoy the video, and if you haven't subscribed already, please do so if you're interested in trading and for upcoming future live streams trading as well. So let's have a look at the charts. Okay guys, so we're looking at a chart here of the S&P 500. It's a daily chart, so each candle represents 1 day. And what I've done here at the bottom is I've put an indicator on called the ATR, the average true range. Now, why am I doing that? It's really to explain to you distance it moves on average per day. So if you look on the right-hand side here, it says the ATR is 71.5. So what that means is that on average, each day, the range, how much the market will move from low to high is about 70 points. Now, when I trade, I risk 5 points to make 10 points. So I'm only looking to make 10 points in that 70 points of fluctuation. So for me, I'm not looking to make 70, 80, 100 points per day. Someone trading on the daily chart, for them, it's very important to make 70 points, 100 points or more on their trades because they will have a much larger stop loss. But my stop loss is 5 points. I'm looking to make 10 points. So the daily range is quite large and we only want a small piece of that cake. So looking at the daily chart here, when you're trying to work out your daily bias, what you're really trying to do is find out on the next candle, is it going higher or lower? It's a little bit like if you're playing cards and you've got a 7 and you've got a deck of cards and you're asking a person, okay, so is the next card going to be higher or lower than the 7? And you're like, okay, maybe higher, lower. You're trying to work out on the next card, is it higher or lower? The same with daily bias. On the next daily candle, do you think it's going to go higher or lower? And the best way to kind of get a guide for that is to look at the current candle. So for example, if we were looking at this candlestick here, this one, this is a hammer candle. Price has a long wick down. So usually when you have a long wick, price tends to want to move the opposite of where the wick is. So on the next day, you can see price did attempt to move higher. Okay, so you could have a daily bias higher on that candle. On this candle here, you can see the wick is to the upside. So price moved up, rejected higher prices and moved back down. So on the next candle, there is a probability that price will tend to move away from that wick to a lower price. And then we can see on this candle here, the wick is to the low. It's longer at the bottom. So price bounced lower, rejected. So the next day we can see price from a daily bias point of view wanted to move higher. Now there are trading opportunities in this day when you zoom down to a 1 minute or 5 minute chart, long and short. So don't feel like because you believe the next candle has a probability to move higher that you just want to take long trades. If you have a 1 minute or 5 minute trading strategy, it is nice to take a long trade in the direction of your daily bias to have a higher probability of success. Looking at this chart here, when I do my top-down analysis on the daily chart, I'm going to show you what that looks like, what my chart looks like, okay? It's going to be a bit of a mess now when you see it now in a few seconds, but this is what my chart looks like when I've done my annotations. So you see there, I've got a lot of lines on this chart. The black lines you see and the red line in the middle, this is the new week opening gap. Now this is an ICT concept. I'll do another video on it after this, explaining exactly how to draw this up. It's the gap between Friday's close and Sunday's open. What you're literally doing is marking Friday's close with a black line and Sunday's open with a black line. And the red dotted line there is the 50% halfway distance between the high and low of that gap. And each one of these new week opening gaps with a high, a midpoint and a low, a high, a midpoint and a low. At the very top here, high, midpoint and low. These light blue lines, what I do is I mark up my highs. So candle highs, I will put that on a previous day's high. You can see here, I put that light blue line on this previous day's high here. Okay, because these can be areas of interest where price may want to move towards. If we zoom in here a little bit closer. This is today's candle. This is a live chart. I marked up this day's high. So price did move up and it took out that high. It even moved to this high of this candle over here. So these are areas of interest that I want to have on my chart when I zoom down, let's say, for example, to the 5 minute. Okay, so I'll have these higher time frame lines on my charts on the lower time frames. But I just don't want to over confuse you now at the moment. I'm going to show you just back to the daily chart here. The most important thing really just to take away from this is that daily bias for me is not important for me to take trades in a 1 minute and 5 minute chart. But I do mark up my levels on the daily chart that are significant. For example, daily highs, daily lows, the new week opening gap, the high and low of that gap, the midpoint. And then this light blue dotted line is used for what's called the consequent encroachment, is the midpoint of this wick. See that big long wick in that particular day? That's a big wick. So if I get a Fibonacci level and I pull my Fibonacci, let's say from the open of that candle to the high, the 50% level, the halfway point of that wick is here. That's an area, if price gets up here, it may not reach the high of this day, but you may find that there can be rejection from midpoints of wicks. And these are all concepts from ICT, Inner Circle Trader. Now I'm going to do a video on the new week opening gap and showing you exactly how to mark this up. I believe that if you're going to do a top-down analysis, the step one is mark up your new week opening gaps. You see here the way I've got 1, 2, 3, 4. So technically I've gone back 4 weeks, 4 previous Fridays to Sunday and marked out these gaps. And what you'll find is on the lower time frames, price likes to bounce off these zones, and they can be great places to either take trades or exit trades as well. But in this video, I just really want to discuss daily bias, the fact that if you're trading on a 1 minute chart, a 5 minute chart, it's not important for you to be successful because the market will fluctuate a lot during the day. If you're only looking to catch 5 or 10 points on the S&P 500, you don't need the daily bias really. So I hope you enjoyed this short lesson. I will do a lesson on how to mark up charts from the higher time frames, and then we'll zoom down and we'll do a live session of the US Open. So that's my plan, is to do a top-down analysis like this, and then I'll zoom down to a 5 minute chart and I'll mark up my buy side and my sell side levels, and then I'll show you some live trading at the S&P 500 US Open, and then you'll get an idea of how I enter and exit trades live. So I'll try to do a video on that. Please do like and subscribe to the channel if you're interested in learning more about trading and ICT concepts. And if you're interested in future upcoming live streams, which I've planned for you guys, where you'll see exactly how I trade, make sure to subscribe so you don't miss out on any of that. Thanks for watching and take care, guys. Bye-bye.